Stocks closed mixed on Wall Street. The Dow Jones Index falls for the third straight day, while Nasdaq and S&P gain. Fed Chairman Jerome Powell, in a speech, also emphasizes that the central bank would need more evidence of inflation easing before it could start cutting rates. The Japanese Nikkei and the South Korean Kospi gain as investors assess comments from the Fed chairman, while markets in Hong Kong, Taiwan and China remain shut for a public holiday. The gift Nifty is indicating a high start for the Indian market. Crude prices continue to surge as geopolitical concerns mount in West Asia. Reports also suggest that OPEC is unlikely to change its production cut policy at the upcoming meeting. Gold prices continue to rally at record levels, with safe haven buying propelling prices over $2,300 an ounce. The Indian rupee ends at a record low of 83.43 against the dollar. An RBI directive on foreign currency derivatives, which only allows for trades to hedge, will be effective from tomorrow. Tesla gets a step closer to setting up a plant in India. Will send a team this month to scout locations for a $3 to $4 billion manufacturing plant, according to a Financial Times report. Sources also tell CNBC TV 18 that Tesla executives are in close touch with Indian government authorities. Tata Motors and Vietnam's VinFast are also exploring an application under the new electric vehicle manufacturing policy. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking. But first up, as always, let's take a look at the Asian markets. Most of them are shut, actually. The markets in Hong Kong, Taiwan and Shanghai, they are shut for a holiday. But if we look at the other markets, the likes of Nikkei and Kospi, they are doing well in trade today. Those are higher. But of course, the comments from Jerome Powell, that is something that the markets globally are tracking very closely. Let's take a look at the gift Nifty, because that is the one that will indicate the movement for our own markets. And that one is indicating an open in the green. 53 points higher is what the implied open is suggesting as far as gift Nifty is concerned, at the 22,595 mark. That's about the Asian markets and the moves that are expected in Indian markets. Let's talk about US now, because Wall Street ended mixed on Wednesday. Dow Jones lost over 40 points and fell for the third straight day, while the S&P 500 and Nasdaq managed to eke out minor gains. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
Markets were mixed today as stocks struggled to bounce back from a slow start to the quarter. The Dow shed 43 points, the S&P saw minor gains, and the tech-heavy Nasdaq added 37 points. Disney shares sliding into the close after the company and CEO Bob Iger won their proxy fight against Nelson Peltz's Trian Partners. Earlier today, shareholders voted to re-elect the company's full board. The vote ends a contentious fight between Disney and Trian and serves as an endorsement of Bob Iger's vision for the $200 billion media company. Fed Chair Jerome Powell outlining the future of 4 rate cuts at an appearance today. Powell emphasizing that the central bank needs more data that shows easing inflation before a rate cut will be possible. Analysts and Federal Reserve officials have forecast as many as 3 rate cuts this year. But some officials have lowered their expectations as the economy remains stronger than expected. That's what's happening here in the U.S. Back to you in Mumbai.
Recent readings on both job gains and inflation have come in higher than expected. The economy added in an average of 265,000 jobs per month in the 3 years through February, a faster pace than we have seen since last June. On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year.
Okay, let's also listen into Atlanta Fed President Raphael Bostic, who spoke on what he thinks is the expected timeline for the rate cuts.
I think it'll be appropriate for us to start moving down at the end of this year, the fourth quarter, and we'll just have to see whether the data come on. But my outlook right now is that inflation is really just going to drop incrementally through the course of 2024, and that incremental progress will continue into 2025, and we won't get to our 2% target till sometime in early 2026. So with that outlook, I think that we have time to be patient, and we can just watch the economy and see if that's how things actually play out.
Well, let's move on and get in more opinion. Mark Zandi of Moody's Analytics also spoke about his outlook on Fed Chair Jerome Powell's recent comments on the rate cut timeline. Let's listen in to what he had to say.
He's still beating the drum that he's got time because the economy is strong and inflation's still above target. I think the key words for me in the speech was they're looking at this meeting by meeting. So it feels like he's saying, look, every meeting is live. We could make a change at the next meeting or the one after that. So it feels, like a rate cut is coming. He did mention January, February inflation data. I think that's really critical. The inflation data is really critical here. Jobs less important at this point. It's all about inflation. And we got to make sure that the bump in January, February inflation was just, measurement, seasonal adjustment, which I think it is. So we'll get better inflation numbers, but we've got to see that. And once they do see it, I think we'll get a cut.
All right, that's the global market action, but how will these cues impact our own markets? We have our research team joining in to tell you just that. What is the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormas, let me come across to you first up. A lot of global markets are shut, but US continues to see mixed reactions.
Mixed reactions indeed, and we'll keep an eye out for that as to whether that rubs off on the Indian market as well. As of now, the GIFT Nifty is indicating a 50-point uptick, but today is expiry for the Nifty, the weekly expiry, so that will be a major trigger as well. The Nifty 22,500 remains that key hurdle. The last 2 days it's been in absolute snooze mode, but it's been in that 150-point range for at least the last 4 trading sessions. It is finding support at 22,350 on the downside. The dips are getting bought into, but they're struggling to cross the 22,500 mark on a sustained basis. For the Nifty Bank as well, it is continuing to grind higher slowly but steadily. It's nearing 48,000 now, and that is the key level. It's at a 1-month high, so you'll keep an eye out for that as well. The broader market's outperformance continues. The benchmarks may do what they wish to, but the Nifty mid-cap and the small-cap indices, the mid-cap index is now nearing 50,000 and is up 10% from the March 14 lows. Among sectors, there is a note that has come out on Nifty IT. It lent support yesterday as well, so we'll see if there is a reaction today as well ahead of the earnings season that begins next week. PSUs and real estate also are some of the high beta sectors that we need to watch out for. Gold is making new highs, so gold financiers will continue to remain in focus, and the next big trigger other than the expiry today will be tomorrow when the Reserve Bank of India comes out with its policy. The Fed, you just heard Jerome Powell saying that the Fed may think it is appropriate to reduce rates sometime later this year, but no clear timeline yet. That did not spur the US markets. The Dow ended lower, but the other 2 indices were slightly higher, so no major cue coming in from the US markets. Asia, most of the indices are shut, and the GIFT Nifty is indicating a slightly positive start for our own markets today. Back to you.
Okay, yes, that's right. Thank you so much, Hormas, for all those cues. But a long list of stocks is something that we'll talk about today. Vamakshi has that list. Good morning, Vamakshi.
Good morning, Sonal. Let me first start off with some quarterly updates. We have one coming from L&T Finance. Retailization has moved to 94% as compared to 75% in the same quarter last year. Retail disbursements are up almost 33%, while the retail loan book has grown by 31%. Suryodaya Small Finance Bank, the advances were up almost 41% on a year-on-year basis. Disbursements have grown by almost 39%, but the growth in deposits has outpaced that of the one in advances. The deposits are up almost 50%. And the CASA ratio has also improved both on a sequential as well as year-on-year basis to 20.1%. RBL Bank deposits are up almost 22%, while advances are up 19%. CASA ratio stood at 140%. DMart standalone revenue saw an uptick of almost 20%, coming in at 12,395 crores. The store addition run rate has picked up. Store addition is up nearly 12.6% on a year-on-year basis. Vodafone Idea will be meeting on 6th April to consider fundraising up to 2,075 crores from its promoters. KC International has received new orders worth almost 816 crores across its various businesses, but it has missed its overall FY24 order inflow guidance of almost 20,000 crores. GE Power India has bagged 2 contracts from Jai Prakash Power Ventures with almost 775 crores. Brigade Enterprises has signed a JDA with United Oxygen Company to develop office space in East Bengaluru with GDV of 340 crores. So on the back of that, keep an eye out on all of these counters.
Okay, all right. So those are some stocks on our radar. Let me go across to Manglam now. All the cues from the F&O space now. Hi, Manglam. Good morning.
Good morning. So it's a Thursday, which means it is Nifty weekly options expiry. But if you look at the last 3 or 4 trading sessions, it looks like there's a bit of a sputtering stop that the Nifty has a little over that 22,500 mark, with the record high being 22,530 itself. The reason for that could be selling that is coming in from the institutions at higher levels, mainly the FIs. Yesterday as well, they sold about 2,200 crore in the cash market, notwithstanding the DII buying of 1,100 crores. And FI selling in index futures picked up after 3 days of them buying. So 1,700 crore worth net selling by the FIs in index futures. They added close to 15,000 short contracts. So if you look at, the FII net short contracts at the start of the series, they were close to 24,000. Thereafter, they came lower to about 15,000 in the previous trading session. And yesterday, after this, it's increased all the way up to 31,757. What it means is that the FII long exposure is now down to 44%, with shorts increasing to 56% itself. What should you be doing on the expiry day? It's the range which the street is playing for. 22,500 call is extremely active with a premium of 33 rupees, telling you that record high would face once again some sort of resistance. If it doesn't, then there would be some short covering. And at the lower level, 22,400 put has been seeing a fair amount of writing for a premium of 50 rupees as well, telling you 22,350, which would be an important support. And that coincides with yesterday's low of 22,346 as well, which is a key to watch out for. In terms of stocks, like we told you yesterday, SAIL and Z are likely to enter into F&O ban. And so it has happened. We'll keep an eye out on this.
Okay, all right. Manglam, Vamakshi and Hormas, thank you so much for joining us and prepping us up for this trading day ahead. We'll slip into a break. Up next, the RBI's Monetary Policy Committee meeting is currently underway with the policy decision awaited tomorrow. We'll get you all the key expectations on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. The RBI's Monetary Policy Committee meeting is currently underway with the policy decision scheduled to be announced tomorrow. That is on the 5th of April. My colleague Ritu Singh brings us the key expectations from this meeting. According to CNBC TV 18 poll, what is expected? Ritu.
Don't expect any changes in rates or stance just yet, but watch out for the macro forecasts with a potential GDP growth upgrade on the cards, according to a CNBC TV 18 poll. There's also an expectation that RBI is going to signal that it will keep liquidity comfortable. Now, if all of this comes true, it is going to be bullish for stocks. 60% of our respondents said that they are going to focus on RBI's growth and inflation projection, with others highlighting that they're going to watch out for any signal that the stance could be shifted towards neutral, or if the tone turns a bit more hawkish given the exuberance in the system which RBI has been highlighting. No one is expecting rates to be tinkered with in this policy. In fact, most of our respondents are also expecting the stance of the policy to be left unchanged at withdrawal of accommodation, with just about 10% expecting that RBI will prepare the markets for a shift in stance going ahead. The first rate cut is only expected in the October policy later this year by most of the respondents, with some expecting it by August, but no earlier than that. On the liquidity front, the respondents largely expect RBI to signal comfortable liquidity. Now, since the last policy, liquidity conditions have eased and RBI has been actively managing liquidity with multiple interventions at both ends, and participants expect that RBI will continue with this and also reiterate its preference to stay nimble with market operations. The inflation forecast for the current fiscal is also unlikely to be changed just yet. Now, while vegetable prices continue to remain volatile, the RBI could find some comfort in the softening core inflation. But on the growth front, half of the respondents are expecting an upward revision, with the domestic growth data remaining robust. The RBI is expected to raise the GDP growth forecast for FY25 anywhere between 7.1 to 7.5%. As per 50% of our respondents, the other half are expecting it to be left unchanged. As to how the governor will sound, absolutely even is the broad consensus. So rates on hold, stance unchanged, some tinkering in the macro projections are the expectations that we are going into this policy with. Of course, the governor's comments in the press conference later about recent regulatory measures, for instance, against financial entities, the larger message from those are also things that we are going to keenly watch out for.
Okay, Ritu, thank you so much for joining us with all those details. So that is what is expected from RBI's Monetary Policy Committee meet. But moving on, American auto giant Tesla will send a team to India this month to scout locations for a $3 to $4 billion manufacturing plant, according to a Financial Times report. Sources also tell CNBC TV 18 that Tesla executives are in close touch with Indian government authorities. Additionally, Tata Motors and Vietnam's VinFast are also exploring an application under the new electric vehicle manufacturing policy. Parikshit Luthra joins us now with the details. Parikshit, what are your sources telling you?
Well, in the last few months, there have been very close negotiations between the Indian government and Tesla. We believe that there are positive indications coming in, and sources in the government are very confident that Tesla is going to avail of this policy. In fact, we pick up from sources that it could be less than a month when Tesla could actually indicate and give clarity on its India plans. This policy, of course, allows a company to import a certain number of vehicles, approximately 8,000, at a concessional duty rate of 15% instead of 100% currently, in return for making an investment commitment. Not just Tesla, you have Vietnam's electric vehicle maker VinFast, which has already entered India. They are ready to explore this policy. You have JSW and MG Motor, which are looking at it very closely, and Tata Motors. Interestingly, Tata Motors was one of the companies which was opposed to any duty concessions to Tesla. But now that Tesla would be coming in, or most probably will come in as a result of this policy, there is competition, and we believe that Tata Motors is also exploring this policy very closely. They are trying to understand more from the government. They are exploring whether they can avail of duty concessions to bring high-end JLR electric vehicles into India in the next 3 years or so. So a lot of interest in this policy, according to sources in the government, but we will have to wait for those commercial announcements to be made by the companies.
Okay, all right. That's an interesting update. We'll keep coming back to you, Parikshit, for more on that. But let's move on. Private equity giant Blackstone is betting big on India. Blackstone's president, Jonathan Gray, who is currently in India, has said that the country is the third most important market for the company after the US and UK. Listen in.
India is actually quite important to our firm. It's our biggest investment market in Asia. And when you look at our equity investing across our firm, first is the United States, no surprise. Second, United Kingdom. India's third when it comes to equity investing for us. So it's very important for our private equity business, for our real estate business. Over time, we hope to expand, hopefully into infrastructure, growth equity, maybe private credit over time. But this is a market that served us very well. We'll continue to expand really in the areas we have been over time. Part of that will come from growth in the companies we're already invested in. But in terms of where we'll deploy capital, I think a lot of it will be in companies in the made from India category, which is India exporting out to the rest of the world, something we've done a lot of. We did that with an EV parts manufacturer business called Sona Comstar. A lot of it will come from IT services. We've done a lot of that exporting to the rest of the world. And then I'd say made for India. We think there's a lot of opportunity serving this middle class. So it's an export-oriented focus. It's also focused on the middle class here. I think energy transition can be another area because there's so much need for energy here. You know, all of us want to try to find opportunities in that space. And then in real estate, it's supporting those efforts. So it's IT parts, supporting that IT push. It's logistics, which can be last mile for e-commerce or for companies exporting. And it's data centers. One of our biggest pushes globally at the firm has been digital infrastructure, which is really the physical manifestation of AI. India's short data centers. We've built a company in that space. We've got a couple of projects under development. We're excited about that too.
Okay, all right. That's the big voice and the opinion coming in from there. Of course, we'll keep getting you more excerpts from that conversation through the course of the day. For now, we'll slip into a break. Up next, we'll get you the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. It's time to get you some important updates we are tracking from Israel this morning. The US says it wants to see a swift investigation into the Israeli attack that killed 7 aid workers from the World Central Kitchen in central Gaza. US State Department said that Israel needs to put better measures to protect humanitarian workers and civilians on the ground. Meanwhile, Israeli Prime Minister Benjamin Netanyahu and US President Joe Biden are expected to speak over the phone today. Israel's War Cabinet member Benny Gantz has also called for national elections in September as Netanyahu faces pressure at home and abroad over the war in Gaza. Okay, that's all about Israel and Gaza, and of course we'll keep getting you more updates on this one, but let's talk about commodities. There's the big move that we are seeing across the commodity names. Manisha Gupta is joining us with all the update. Hi Manisha, good morning.
Morning, and yes, as you said, everything that comes under commodity as a category is surging in the markets right now. Well, there is a decline in the dollar index, and that has been supportive. And then the street overnight is also reacting to the U.S. Fed Powell statement saying that lower policy interest rates would likely be appropriate at some point in this year. So the markets already are factoring in a rate cut from the month of June from U.S. and from the European Union as well. And that has been very, very supportive, apart from the Middle East tensions also. So when you look at metals as a sector, you have copper, which is trading at a 13-month high. Ditto is the case with aluminum. That one is at a 13-month highs also. Zinc is at a 9-week high. Silver at a 26-month highs. But the glitter clearly is in case of gold, where today is going to be an 8th straight day that you have seen gold scaling another record high. $2,300 per ounce is done and dusted with now. When you look at the June gold prices, those are trading at $2,320 an ounce. So the contango is quite strong. The future months are trading in the positive, and that is factoring in a thing that you could see further gains from here as well. So even as it is overbought, the momentum is still quite strong, and further gains in gold is what we could see in the Indian markets as well today.
Okay, possibility of a further up move. Thank you so much, Manisha, for joining us with those insights. Let's in fact also listen into RBC Capital Markets' Helima Croft on her outlook on the crude oil prices and the expectations from the next OPEC meeting.
So we just had an OPEC monitoring meeting today. They basically rolled over the 2 million barrel production cut. So the June 3 meeting is going to be when OPEC basically makes a decision, hold the line on production cuts, put more barrels on the market. But if OPEC is slow and ramping up, I do think the Biden administration will have little option but to go back to the SPR. China demand has held up better than expected. I mean, I think that's part of the reason that when we think about why OPEC isn't putting barrels on the market now, they still want to wait and see where demand shakes out.
Okay, that's about crude oil prices, but let's talk about some international news now. At least 9 people are dead, 50 reported missing, and more than 1,000 injured after a 7.4 magnitude earthquake hit Taiwan yesterday. Dozens are feared trapped under debris in what is the strongest quake in 25 years. Massive landslides and over 50 aftershocks were reported in the aftermath of the earthquake. Rescue workers have been working round the clock to free people trapped under the rubble. The mayor of the city also reported that people inside buildings in dangerous conditions, they have been evacuated. Japan and the Philippines have also lifted the tsunami warnings that were passed earlier. Okay, all right. With that, we'll do one thing. We'll wrap on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next.